Once again, hello everyone. So today is going to be smart money, smart money trading 101. Today we're going to be discussing what is smart money. Let me just fix that. We're going to be discussing what is smart money and what we look for in the market, right? First we got to understand smart money, we got to understand what that really means. And smart money in the most simplest form, right? Is basically is trading with the banks after the manipulation, right? So how do banks trade? Banks trade at supply and demand areas. I did a training on that, on supply and demand areas in the market. Banks trade at those areas. And at those areas, they built up liquidity from retail traders and other traders in the market, hedge funds and so forth. And from doing that, you know, they run out liquidity before they make the explosive move. So our goal is to wait for banks to um, manipulate the market, and then when it's set to correct itself, we get in with with the banks. Okay, so like this diagram over here, before we get forward, right? Let's look at this diagram over here. We got to understand what's going on in the market, right? So before even looking at the charts or this diagram over here, let's just go to Google real quick and just type in forex market patterns. Um, I mentioned this before to you guys, and what I want you guys to understand is that if we look at Google and just look at the images, you're going to see all these forex market patterns. Now, we got to understand that when we lose, the banks win, right? The banks do not want us to win in this market, right? So the goal is to always collect their money, keep us, always have us losing. Now, with that understanding, the banks would never allow us to know how the market is being moved, right? So we can be profitable. So yes, the banks allow all these individuals to talk about forex market patterns, and you got double top, triple bottom, all that stuff. Um, bullish pendant, you got triangle patterns and all that stuff, right? And the banks know what you guys are seeing. The banks will manipulate the market in a way where you do see a double bottom, right? And you thinking, okay, double bottom mean buy, right? And because of that, the banks would drive the market even lower to take out your liquidity, hit your stop loss, and collect your money before going to the correct direction, right? Retail traders are taught this: whenever the market, go like this, and you have a double bottom, right? You have an equal low over here, right? The market is gonna then go buy. Whenever you have a double top, right, equal highs over here, the market is gonna sell, right? Retail traders are taught this. Now the banks know this. So whenever you enter your trade over here, so for example, you have a double top, right, like this. Right, you have a double top like this. Whenever you enter your trade over here, right, double top means sell, right? Where do you put your stop loss? Your stop loss is going to be above here. So what happened is that the banks would drive the market to collect that liquidity before taking it down, right? So what we're doing is waiting for the bank. Smart money is waiting for the banks to take out that liquidity, and then we catch this explosive move with them, right? Now, should you be aware of forex pattern? Yes, because if you know the forex pattern, you could always detect the manipulation and then trade the pattern, right? So for example, 1 second. Right? So for example, if we have a triangle pattern, right? For example, we have a pattern like this. I'm not triangle, sorry, head and shoulders. We have a head and shoulder pattern, right? And the brokers, the banks know that once you got to this area, you're gonna look to trade this and take it down, correct? You're gonna look to take this market down. What would happen over here, right? The banks would literally just take this price a little bit higher, right? Not to this equal high, but a little bit higher, right? Around this area, and then take the market down, right? Also, what would happen in a head and shoulder pattern, right, is that the banks, right at that neckline area, right, the banks may come back into the structure and then decide to come out again, right? Having you think that the market is going the opposite way, right? Because when you enter that market at that neckline, if you enter off a break and close, right? Where's your stop loss? Above here. So the banks are taking that out before deciding to go down, right? Always remember this, right? This is a key factor, and I want you guys to understand. And it's something I've recently learned as well, is banks buy, always bring price. How can I word this the right way? Banks bring price. How can I word this the right way? Okay, banks buy higher and sell lower. Right? No, sorry. Banks sell higher. Sorry. Banks sell higher, right? And sell and buy lower. I'm sorry, and buy lower, right? And what do I mean by that? The banks sell higher and buy lower, right? So once again, let's look at it from this. Let's look at buy lower, right? Let's look at this, for example. What do I mean by the banks buy lower, right? What do I mean by that? So once again, we say we have a triple bottom, right? Which is a reversal for a buy. So we have price coming here, equal lows, right? We have equal lows. We have one touch here, two touch, three touch, right? So we have an equal low here. What the banks would do, basically, once you understand the concept, the banks would bring the price lower, right, in order to buy, right? So it's the same thing if it's a double top, right? So we have a double top, right? We have equal highs. And if you understand this, guys, trading become easy, right? So we have equal highs over here, right? What the banks would, double, a double top is a reversal pattern for a sell, right? But what the banks would do is bring the price higher so they can then sell, right? So banks sell higher and buy lower. Once you understand that concept, trading will become a little bit more easier, okay? Okay. So let me just actually move this over here so we have this as well. Now let's go into let's go into this. So on one of our last trading, we talk about different type of trends, right? What were the different types of trends in the market? The market do three types of things. You know, you have the uptrend, right? Let's use a different color. Let's make that blue. You have the downtrend, correct? Price is coming lower, right? Let's make that red, right? And then you have when price is going sideways, accumulation, right? Right. And, you know, retail traders tell you to stay away from this market. This market is a no-no, right? But here today, I'm going to show you, right, how you can profit off this market. You can profit off all market is a good market. Don't ever let anyone tell you cannot trade on certain markets. Every market is a good market. You could trade here, you can trade here, and you can definitely trade here, right? So let's review that. And let's review this sideways market. Let me just actually delete this X, delete all this actually. So let's take a look at the sideways market. That's what we're going to be focused on today, okay? This is known as consolidation, right? Let me just do it over. So we have sideways. So this will first sell, make that red. All right, put a square over this. This is a consolidation market. Consolidation, I believe I spelled that correctly. Right, and this is what we're going to be focused on. We're going to be focused on this market here. All right, so let's take a look over here. Right, one of the things so once again, when we talk about smart money, remember it's trading with the banks, right? So what we look for in the market, we look for liquidity to be taken out. As we mentioned, with the double top and the triple bottom, whatever, head and shoulder, we know where the banks know where you're putting your stop loss based on market patterns. Give me one moment, guys. Right, the banks know where you're putting your stop based on market patterns. Give me 1 second, guys. 1 second. Sorry about that, guys. I don't emergency call. Just sorry about that. But yes, so right. So when we talk about the bank, where was that? Yeah. So what we look for in this market, we look for liquidity to be taken out, right? And that's, when we talk about, once again, when we talk about double tops or double bottoms, right? This represent a buy, a double bottom, right? We look, your stop loss is normally here. That is where your stop loss is at. So what the banks does as well, they, like as I mentioned, they buy lower, so they take price down here, take out that liquidity, and then buy the price up, right? So what we're doing is waiting for all that stuff to happen, right? We're looking for liquidity to be taken out, market filling imbalances. Sorry. We're looking for the liquidity to be taken out and the market filling imbalance, and the market filling imbalances. I said within the market. I gotta correct this. Sorry about that, guys. All right, so you guys can have that as a screenshot. Okay. So let's look at this diagram over here. So this is a diagram, right, of a consolidating market. So price came in started from this point, and it came into the structure, and then it started going sideways, right? While price is going sideways, what happened is that we start forming liquidity on the top, right? So that's why I put this money sign there. So what happened is we have a double top, an equal high, right? We have equal highs, which is signifying that people that saw this, right, they put in their stop loss where? Above here, right? And because they put in their stop loss there, we know that the bank is looking to take out that liquidity. But what happened, the reason why the banks bring market into a sideways accumulation is still basically to build the power to drive the market into a specific direction, right? They basically taking your liquidity to move the market into a specific direction. So so individual stop losses are usually above this area, right? Because the double top, right, represent a sell. So what happened is that the banks literally just draw price up higher over here, which this is the manipulation over here, comes back into the structure, retest, and then take price low, right? Now this right here is smart money. We look to enter right over here. That is where we enter, right? And I'm gonna show you a beautiful representation of that within the market soon, right? So once again, liquidity is getting built up over here, right? The bank drive price higher so they can sell lower, right? They drive price higher to take out that liquidity as well, right? So they can bring the price lower, right? Not only that, because it's a sideways market, liquidity is also being built on this side. We have a triple bottom, right? So this, even though price came, I showed that price shut down here, right? It could have did this. It could have came out here as well, came back and retest and also buy up, right? This will also be the manipulation. That is how banks trade, guys. That is how banks trade, right? So let's look at a real life example. Actually, before we look at a real life example, right, I want to also speak on this. Now, this was an example of the market moving in accumulation, right? Consolidated market, right? Sideways market. Now, a sideways market, guys, I want you guys to understand, it does not mean you always have to have equal lows and equal highs on both sides, right? All you're looking for is an area of interest where price is bouncing off regularly. So as you can see over here, right, we have price. Let me just change that color to red. So we have price bouncing there, bouncing there, bouncing there, right? Giving us liquidity. Even though this is a high here, this is a high here, and this is high. As you can see, it's not equal high on this side, right? So what you're looking for is an area price is giving you equal lows or equal highs. wait for price to break lower, take out liquidity, come back in the structure, retest, and then you buy up, right? You buy up, right? There's two types of traders out there, right? And I'm teaching you how you can be both. You have the break and retest traders, right? That go like that. And then you have the breakout retest, break back in retest traders, right? So there's two types of traders out there, and I'm showing you how you can be both. You can be both traders, right? Why limit yourself? That's why I said every market is a good market if you know what you're looking for, right? Every market is a good market if you know what you're looking for, right? So you have the breakout retest trader, right? And then you have the breakout close back in retest in traders, right? So let's take a look at that on the real life market. And I hope all of this makes sense, right? So over here on AUUSD, right, it's a perfect example. This is on the 4-hour time frame, right? You can find consolidation on all time frame, guys. Over here, we had consolidation, right? Price, as you can see, came lower and it came right back in structure. And we could actually look at that later on, right? But let's look at a higher time frame for now, just so it's a little bit more clearer, right? So as we can see, we have consolidation right here. This market is consolidating at this specific area, right? What's happening here? We have price. Price came out, right? We have these highs over here. We have this high over here, price, and a break in the high came out and came right back into that structure, right? Once it came back into that structure, look what happened. We have a retest and then sell down to here, right? Now that was one move that you could have caught. Now, another move you could have caught was this move over here. Why this move, right? Let's go back to our notes, right? What do we look for? We look for liquidity to be taken out and the market fill in imbalances, right? So when we came back over here, we can see that price was here. It came back here, giving us some equal highs, which is telling us liquidity sitting here, right? Price then came again over here, triple top, which is also telling us liquidity is here. Now that's just seeing where liquidity is at in the market. And what's the second thing? And market filling imbalances, right? So if we look over here in this market as well, we can see that, I got to do a training on this as well, but we have some sort of gaps over here in this market, right? And what do I mean by gaps? The market always has to go up, correct itself, go up, correct itself, go up, correct itself. Even if it's coming down, correct itself, go down, correct itself, go down, correct itself. This market shot down, it retests in the structure, but did not correct itself up here, right? And before it comes back down. So, right. So we also have some imbalances over here in this market, right? So now when you look at this, right, not only do we have liquidity imbalances over here, right? Not only that we have liquidity over here, we also have an imbalance over here. So what the banks did again, right? They went and take out liquidity, came back into the structure, retest, right? And once retest, they literally took this market, guys, all the way down, closing out that structure, right? Now, and this isn't a sideways market, right? I want you guys to understand that this market here, right? If you look at from over here all the way down to this area, this entire market was consolidating for 140 days. For 140 days. So for 140 days, right? Couple months, you're going to be sitting here waiting for this market to finally break out so you can catch a trade, right? You can trade in every single market, guys, right? Every single market. It doesn't matter if it's a trend, uptrend market, downtrend, or consolidation, sideways market, right? You can trade in all market. Now, over here again, I know we looked at these two manipulation over here in this market, right? We look at the manipulation 1 here and then manipulation 2 here. But what happened to down here? Manipulation 3. So look what's happening over here. We have price came in, bounced the structure right there. Price came back and bounced here. So from this point to this point, we had an equal low giving us liquidity there, right? Price ended up coming back here again. So that's also now a triple bottom. Liquidity is sitting there, right? So look what the banks did. They bought lower, right? Came back in the market, retest, big buy up, right? Big buy up. So God, these moves are you're talking about getting into trades where you don't have to worry about drawdowns, right? These moves are giving you over 200 plus pips. And this is on the higher time frame. This is on the higher time frame, right? So that was one example. Let's see if we could find another example over here. Let's look at this market over here, right? We're gonna go into 1 hour for this one, right? This was another sideways market. So we had a trending market over here. As you guys can see, we had highs, lows, lower highs. Market is trending here. And then what happened? It started going sideways in this market, right? So the market started going sideways here. Look what happened. We have double tops over here, giving us liquidity, right? We have some double bottoms over down here. That's also giving us liquidity, right? So look what the banks did, guys. Let's look at it. Zoom in so we can have a clear understanding. So the banks literally drove price out, take out everyone's stop losses that was there, brought price back in, retest, and then took price all the way down here, right? Took price all the way down there. Now, what I want you guys to understand, right? Because now the banks also form liquidity here, right? Look what they did. They brought price up here, right? Tricking investors are going to go up, traders are going to go higher, right? And then took price out here to collect all those stop losses that's sitting down here, right? Not only that, you can look at all different types of confluences, guys, right? You can look at all different types of confluences as well. And what I mean by that, you can obviously see that the market is on a downtrend. The market is in a downtrend. So for anyone to truly be looking for overall buy, right? It's on, that's what it makes sense. You wait for a buy once you broke off trend, right? And broke off the previous swing high, which would be this manipulation up here. Price is still is below that. We're not looking for a buy, right? But nonetheless, guys, those are two examples, right, of banks manipulation. So now I just show you guys how you can trade in a sideways market and being profitable. Let's see if we find another example, right? Because this stuff is all over the market, guys. Look at this over here. Look what happened here. We have a double bottom, right? Look at that double bottom. You're told double bottom, right? It's for buy, right? You're told that double bottom buy, right? Look what the banks did. They brought price up a little bit, but then they came lower, came in the structure retest, and then took price and never came back down, right? These are the moves you guys want. You want this move here, right? You want this move. This is what you're looking for, right? Let's not worry about drawdowns, right? Another move, right? Now, this one wasn't necessarily, 1 second. Right, these are the highs over here. Give me 1 second. I gotta correct this. I adjusted, but these are the highs right here. What happened over here? Price came down. You test a structure, came back in, right? Took off. Now, this one, because I marked up this chart for a while, so let me just back test it for a second. This specific, where is it? This, yeah, I had this higher for a reason. This was higher because if you stretch this, supply and demand, right? It goes all the way across here, reaching that peak right there. So price came up. Now look what happened over here, guys. This is what I'm talking about, filling imbalances as well, right? So we had, look at this. So look what happened over here as well, guys, as mentioned. So we had highs over here, right? Highs over there. Price went up, came back in, retest that structure, came down. But not only that, guys, what do we have over here? We have a peak here, right? And then we have a peak here. Can't zoom that in anymore. So what that means, we have liquidity sitting there. So we know that liquidity is sitting there. That's also more confluence, right? More reasons for why when price came down lower, we knew that price had to go and take out what? That liquidity sitting up there. Does that make sense, everyone? Right? Let's look for more examples, Let's see if we could find some more examples. Sideways market. Let's look for a sideways market, right? These are trending market. A sideways market, guys. Let's see if we can find one. Please comment in chat if all of this starting to make sense, guys. All of this makes sense. Let's see if we can find a sideways market. These are kind of trending. 1 second. Is that trending market? Trending. Okay, give me 1 second. Trending market. Let's go on a smaller time frame. Right, really, you have to, you could always, there's always sideways market. It just meant I'm looking at a bigger time frame, right? But if you go on a smaller time frame, say for example, a 5 minute, right, we can always see a smaller market, a smaller thing that's going on. For example, look at here, right? This is on the 5 minute time frame, by the way, guys. Let's look at this. My exact point over here, right? Price came up, price came down to this area, came down, came up, then it kept bouncing off these structures, bouncing. Then it came lower, retest, and then bought up, right? Sorry. Price kept bouncing off this area, right? When it's bouncing off that area, liquidity is getting built up. People are entering over here, saying that market when it reverse is not breaking the structure, right? Price ended up going lower, came up, retest, and then bought up, right? Now, what happened over here, we also had an imbalance sitting right here, right? So the banks actually came down, filled that imbalance, retest. But what happened is that it gave us now another double bottom. So that's also more liquidity, right? Banks bring the price lower, came back in, retest here, took the market up. And it was gone from there. Went all the way up, right? So there's always accumulation, sideways accumulation in the market, just on a smaller time frame, right? Let me check. Let's see your GBP again on a 5 minute time frame. Let's see. Sideways market. These are trending. Okay, let's do 1 second. Oh, right here. Look what's happening, guys. Price came down, hit this structure, came up, hit this structure, came back, hit the structure, and it just dancing around here, guys. Dancing around there. Finally came down, broke, boom. So all this area over here, liquidity, right? Came up. Now, if I drag this across, right? Revenue came up, retest, and it's another point of entry. Stop loss is always that low anyway, right? So price even come here again, it's all right, but never, well, that's like what, 2 pips drawdown from your entry. That's, yeah, 2 pips, no problem, right? Price just took off from there, boom. Keep in mind as well, this is a 5 minute time frame, right? So this could have been like a 2 hours or so. Let's see if we can find another sideways market. And this happens over and over, guys, over and over. Over and over. Over and over. Sideways market. Look what's happening here. Look at this, guys. We're at price what? Came down here, came up here, came down here, came up here. What this gave us, boom, double top. Money sitting there. Once you start spotting these, look at it, double bottom, money sitting there. Once you start spotting these, trading become easy. Look what happened though. Check out liquidity. Came in, retest back here, took price down. Boom. It's off the 5 minute, guys. You could do this all day long, right? Entry, entry off that wick, because that would have been a 50%. We're gonna have another training to explain that, how you find entries, right? Price went all the way down here, right? Caught a nice 20 pips, stop loss. We're looking at as 3 pip stop loss, guys. Okay. All right, look what happened over here. So we have this high, price came here, high, look at that. Boom. Boom. Look what's happening here. Triple top, liquidity. Boom. We have this high. So once price doesn't give us an equal high, then we're good. And look, we have these double, triple bottom here, liquidity. Boom. Price went what? Higher. Took our price. Came back here to what? Fill out imbalance, retest structure, went down. Boom. And this happens over and over again in the market, guys. Once you can spot these, this is on a 5-minute. Once you can spot these double bottoms and triple bottoms and stuff, right? Trading become a little bit easier, right? And now even, you got to also understand too, if price doesn't break these levels, right? We have liquidity here. Price doesn't break these levels, right? These are confluence when price go and hit a specific structure, right? Because look what's happening over here. We have price bouncing off this area. So there's liquidity sitting there, right? So when price came on, take out our liquidity, came down, retest here, right? Hitting that structure, retesting, and we have money sitting here. We knew price wanted to come all the way down here to collect all those stop losses that's sitting there, right? That right there, guys, is how you can trade in the sideways market accumulation and be very profitable, right? Like the 4-hour time frame on this. Do you guys have any questions? Right, you could rewatch this recording over and over. It makes sense. If you have any questions, let me know. Right, I'll gladly answer any questions you may have. Let's see the chat. Yes, makes sense. Okay, good. Right. Once you guys can start spotting these, right, and one of the things is that it don't have to be, guys. What I want you guys to understand, it don't have to be the purpose of the sideways. The purpose of the sideways market, right, accumulation market, is that it's building up liquidity on both sides, so it's easy to spot. But it does not have to be a it always going to be some sort of sideways market, because if it's equal lows, equal, that's a sideways market. But you could just look for those alone, guys. So you look for, you watching the market is going like this, it's up and down, right? Price came up here, right? They came here, and they give you an equal high right here, right? Wait for price to come down a little bit, take out that equal high, come back in the structure, retest, and drop, right? Because this was the equal high here. Boom. Right? That was the equal high right there. Right? So wait for price to just go above that, take out that liquidity, come back in, retest, take the trade down. Right? And you don't have to, and we went over a training of supply and demand, right? So, you don't have to take the trade far enough. They trade from supply and demand to supply and demand, right? Right there. So if we go back and look at this, right, we're looking at supply and demand to supply and demand. You take, you enter this trade here, you're just taking it right back to here, 200 pips, right? Don't worry about, if you understand where the market is going, of course you can always hold it, but you just focus on trading supply and demand to supply and demand. Makes life pretty much easy, simple. You don't have to worry about nothing. Just in the market, making money, wash your hand and you're gone, right? Look what happened over here. Trade the market from what? Supply and demand here to supply and demand, right? If you try to hold it long-term, price end up reversing on you, right? So trade it from here to here, right? Definitely should be trailing your stop loss too, right? But, take your, trade this supply and demand to supply and demand. Same thing happened over here, right? Obviously, you could have traded higher, but traded from supply and demand to supply and demand. That's it. If you understand the liquidity that's up there, obviously you could take it a little bit higher than that because you know where it's going, and just take it right there. You don't need to hold it all the way up here, guys. If you choose to do so, that's, obviously that's on you. Now, this is also, guys, a major thing as well, right? Let's look what happened over here. Look at all of this. We have liquidity sitting here. Banks took the price lower, came all the way in, retest back that same structure, and then boom, take the price off, right? Am I saying to wait for something like this? That's on the 4-hour. You don't have to, obviously, but I'm just still showing you how price play out, right? Let's look at another example. Look at this over here. Look what's happening over here. We have, look, price coming down, right? Give us what? Double bottom. Double bottom means what? Buy, right? Can you make profit off double bottoms, guys? Absolutely, you can. You can, right? Now, what I want you guys to understand, right? And even this double bottom, it wasn't profitable, right? You would have, most traders would have lost this. Let's dissect it real quick. Let's dissect it, right? Let's zoom in and dissect this area. we're going to look at right here. Just dissect that area. Look what's happening here. Look what's happening here. We have the double bond. This is on the 4 hour. Keep this in mind. So most traders get an entry off their the 1 hour, 15 minute, 5 minutes, so forth, right? So let's look what's happening here. Right, price came down and it gave us double bottom right here. This was your double bottom. That's your liquidity, right? Price came up here. If you made a little money off this, yeah, okay. Yeah. I mean, that's good pips, 89 pips. That's good. Not saying they don't work to an extent, but they're not the true move, guys. We're talking about catching that true move and being maximized profit, right? So now look what happened. The banks just came right back down, take out liquidity right here, right? Drag that across, liquidity came, take out that liquidity right here. Came back in the structure, retest. And look, while it was doing that, it touched it over here again, and it touched it right here. So that's more liquidity being built up. Take that out, retest on the structure, and it took price there, right? That was, obviously good profit, guys. So the difference between catching it here and catching the true move, right? That's 200 pips to 89, right? So, once you can start spotting those double bottoms, guys, trading becomes very easy. Very, very easy. Very, very easy, right? Let's say we could spot another one, right? Let's see. Okay. This was the sideways market, right? Look at this. Price came down. Give us what? A double bottom, right? Came lower. Sorry. Price came down. It was a double bottom, came lower. Give us a double bottom here. Look what happened. Banks came lower, right? Banks came low, came back in that structure, retest, take the price up, right? Good profit, 135 pips. Now, price ended up started going sideways here, right? Because this right here, guys, was the high, and this right here was the low. Just make that a little darker, right? So this was the high, right? When you join the not that we understand this was price, the banks taking out, this was banks driving price up there. This was the high, right? Now look what happened as well. Because we know there's liquidity sitting. Well, first there wasn't liquidity sitting here. It actually formed liquidity, right? Because price was here. But what happened is that as time go by, right? Price came in the structure, is dancing here, right? Came down lower, dancing here. Now look what it did. It gave us more liquidity on this side. Price came down here, right? Price came up, take out liquidity, came back under, retest. This right here is your move, right? This right here, oh snap, what did I just say? Price came up, take out liquidity right here, came in, retest. This right here is your move, and then price just take off, right? Now we see that price came back over here. It was not an equal high, it wicked above. That's one, but nonetheless, right? Stop loss should be at the high of here. So that's about 20 pips, right? Price never hit your stop loss, right? So, this, with this strategy, guys, is really, designed to, to be stress-free. Just let the market go and play out, right? And as you can see, take it down back to this low, that would have hit. Now, we talk about risk management at the end of the day. No strategy is 100%. If this was 100%, we all be a millionaire by now, guys, right? But what I want you guys to understand is that it's very profitable, right? You enter there, you still bang those 76 pips, right? You 76 pips in profit. One, stop loss should be either in profit trailing, or stop loss should be at entry and you took partials and stuff out, within this level. Because if price come here and this is your stop year, this is your take profit, not far distance. Some partial should have been taken, right? So, and if it came back there, you spot that again, you could have definitely still catch more profit off here, right? Now, why did, what's significance about this, right? That I will talk about another training, but that has to do with this candle here, right? So that's another training, smart money training, right? This is just for the basics. Understanding that banks chase liquidity, right? Whenever they see double tops, double bottoms, etc., right? They chase that liquidity, take it out, and then make the true move. Double top mean price want to go up is a reversal pattern for buy, and that's correct, right? Price do want to buy. but the banks know that, and they know that you're entering for the buy. So what they're doing is going to take your money first and then go for the buy, right? So they know that they know that you see this reversal pattern, because everybody, all these retail traders know it. So what they're going to do is like, okay, no problem. Let them all enter, put their stop loss in, give them some minor profit, let them think life is great. Boom, take them out, right? And then do what? Check out liquidity. Now, what I want you to also see is that over here, liquidity was also being formed, right? But liquidity wasn't taken out here. So that's also confluence, right? More reason for why this trade, when this trade retests in, to take it up. That's more reason to take that trade up, right? Look at this explosive moves of these candles. This is what you want. No drawdown, just move taken off, right? Take out all that liquidity over there. That's what you want, okay? Okay. Right. You know, when you look at, look at these lows, right? You can see that between here and here, you have some liquidity sitting here over as well, right? Between this point, liquidity, and these points over here, right? These just help strengthen your trades every day, guys. Once you understand what's going on, the market price came out, right? Retest here, but this wasn't a retest in the structure. It's another training because it has to do with these candles as well, right? Price took out, boom. All right, so we will definitely review those other stuff so you guys can have the full package. But that conclude our trade each supply and demand. Right, correct. That's a 20. Correct, exactly. So that is Smart Money 101, guys. For those that are waiting for, if you're wondering about my analysis, I'm looking for a retest here, right, around the structure to fill some imbalance, actually some imbalance off these three candles right here, right, somewhere around here. I'm looking for a retest and then take price down. And I'm taking price to this orange line, right? That should be a potential, 140 pips, right? But do you guys have any questions before I end this call? Right, that's the training. Once again, we talked about what is smart money. Smart money is trading with the banks after manipulation, guys. After manipulation, right? What are we looking for? We're looking for liquidity to be taken out and the market filling imbalances, right? That's all we're looking for, right? Does anyone have any questions? You're welcome. All right. So once again, this training is recorded and it will be in the chat for everyone to have. If you have any questions, let me know. If not, thank you guys for coming on. Feel free to exit if you want. If you want to ask me something after, I'll stay on a little bit more. Any questions? No more questions? All right, no more questions, guys. Thank you, guys. Oh, if you guys want a picture, 1 second. All right, so this is banks, this is Smart Money 101, right? And this is the diagram example, right? So my liquidity being built up, double bottom, double top, right? Then the manipulation of it breaking out, closing back in, retest, and then drop, right? One thing I mentioned, right? So how to spot the difference between a retest and the manipulation. The manipulation is usually go straight up and come down like a triangle. The retest, right, usually go like an arc like this. That's the difference, right? That's the difference, guys. All right. So if you look at any of the manipulation, it's very sharp. When you look at the retest down here, look at it. It came all the way around like this, and then it dropped, right? When you look at a retest like this down here, right? As you guys can see, it came down here like an arc, then drop, right? When you look at the manipulation, it's very steep, come in, out, and just drop, right? Look at that. It goes straight up and it's straight in, right? Retest, drop, right? There's a difference, right? One is more like a triangle and then the other one is more like an arc, right? Or triangle and an arc, right? So I would, as every time I do a training, I think about more stuff to teach you guys, right? Now I don't really be thinking about because it's in my head, so I don't really be thinking about it, right? Like subconscious, right? But definitely got it. Okay, no problem, no problem. All right, thank you guys for coming on. Thank you guys for coming on. All right, have a wonderful day.